Hello, I am Sarah Weldon. I am the founder, or one of the founders of Trufinco, and this here is Corey Richard. He is one of our incredible finance officers here at Trufinco. We are a all-inclusive finance company that does all types of funding, and tonight we are going to talk about everybody's favorite topic, which is real estate funding and creative real estate funding. So let's just dive right in and talk about it.
So there are a lot of different types of real estate funding, Sarah, aren't there?
There are a lot of different types. Tonight, we are specifically going to be talking about real estate funding in the world of private lenders because we work with private lenders. And no shame on banks, but when it comes to real estate funding, absolutely private lenders are the way to go.
And there are a lot of different types of real estate opportunities. For us, we do fix and flips, we do buy and holds, ground up construction, cash out refinancing, and then one that a lot of folks don't really know about at times, at least from my conversations as a finance officer, because as folks schedule calls with our team, I'm one of those guys that helps folks understand their situation a little bit more. And one of those is down payment.
Oh, down payment. Yes. So that's going to be a great topic. We're going to talk about how you can essentially get into an investment property without any of your own money, which it does exist. People doubt that. It is real and true. And we're not saying getting into real estate investing without having any money. No, because that would be foolish. You can't be penniless. You have to have some money of your own, but you can actually get into a property without using your own money.
And what does that involve? I mean, if I'm one of those people, I talk to folks all the time that are looking to do that exact thing. So what are some things to look for?
So let's talk about that, because the biggest hurdle most investors face, especially new investors, is how to come up with that down payment. Because on your average purchase, you're looking at 25% down, which that can be pretty significant. Even on a $100,000 purchase, maybe $25,000. So the biggest hurdle is that. Well, the benefit is when you work with private lenders, you can use borrowed funds for that down payment. They don't care where that down payment comes from. So that's where working with us can be very beneficial, because we have all types of funding. So not only can we help you with the actual mortgage to purchase, we can help you with that down payment funding. So that can come in different forms depending on your situation. You know what I'm going to say. You know what my favorite type of down payment funding is.
What is it?
You don't know? It's capital stacking.
Oh yeah, of course.
Where have you been?
I knew that. We talk about it all the time.
We do, but it really is the most versatile type of funding. So what is capital stacking? I'll do it in a nutshell, just so that we don't bore people. Basically, capital stacking is stacking capital, except it comes in the form of business credit. Business credit doesn't reflect on your personal credit, so you're not ruining your personal credit. It comes in the name of your LLC. Also, this type of funding doesn't require any financials, no tax returns, nothing. It comes at 0% interest for up to 2 years. Funding amounts up to $200,000. Did I miss anything? Were those the highlights about it?
Pretty much. I mean, when I talk to folks every single day, it's the idea of getting off of personal. I speak with folks that, obviously we're talking about real estate today. This program, it can work across a lot of different industries for a lot of different types of companies. But specifically for real estate, I talk to folks that have funded their personal home, maybe their first investment property with their own money. And a lot of folks have gotten themselves into some hot water. And that's why we love talking to folks early about this. Even folks, you might be listening right now that you're thinking about getting into real estate investing. You don't even have an LLC yet. Capital stacking can work in terms of getting at least an offer to understand your situation before actually jumping in, so that you actually understand, so to speak, the cards that you have in your hand.
That's a great way of putting it. Absolutely. So that's one way for down payment funding. You can do it. There's other ways. There's personal funding. If you've got a great W-2, there's business lines of credit if you have a good business. I mean, you name it. So point of that is, obviously, just because you don't have that full amount doesn't mean you can't get into real estate investing. I truly believe anybody that can be a little creative and set their minds into it can get into real estate investing.
And then also just understanding the value of the types of properties that you're going after. So one thing that I say a lot as a finance officer on calls with our clients is getting an understanding of what your situation looks like, so that you can figure out the types of properties that you should even be looking at. Because I feel like a lot of people, they just do a bunch of research, and you might be one of them, where you're researching all this property, but you don't actually know what you qualify for. And then ultimately, a lot of those folks go through the process with us, and sometimes they get offers that they want, And others times they get offers that are a little bit lower than the properties that they've been looking at. And then they want to work up toward that. But at least they have an understanding now of what they can go after if they really want to dive into it right then and there.
Absolutely. Great point, Corey.
Try my best here.
You're doing great. So let's now that we've talked about how you can come up with that down payment, let's talk about the different types of loans, and more importantly, why it's better working with private lenders. So biggest differences with private lenders, they're not going to require financials. So no tax returns, no income or employment verification, none of that. They don't focus on that because when it comes to investment properties, it shouldn't matter. It shouldn't matter what your debt to income is because that property is what's going to be paying that mortgage, that renter. So big difference there, no financials. They will put the property in your name, in the name of your LLC, which is huge because that not only takes that liability off your personal credit, which is what we're working towards, it also puts that layer of protection between you and that renter.
Yeah.
Because if somebody sues you, which unfortunately we're in a sue happy society, they would sue your LLC and the assets tied to that as opposed to yours. So that's why a big piece of why I love private lenders is they do that. I mean, additionally, the process is much easier, much less documentation, still does an appraisal, you still work at a title company to close, but just a better process, faster. I mean, we can close on a DSCR loan in as little as 10 days.
Yeah, this is not like dealing with banks. No. And I'm sure a lot of folks watching right now are either dealing with a bank currently or have previously done so. And we all know that banks are getting tighter, they're getting stricter. They ask for an arm and a leg for even your firstborn, so to speak, right? Just to get funding for your next investment property. Private lenders, as Sarah just said, we're just making sure that, as an example, your credit score is where it needs to be, and then just understanding the property itself and not even asking for any financials.
And speaking of credit score, let's address that really quickly. So on a DSCR loan, we have a lender, lowest they'll go is 620. And on a fix and flip, lowest is 640. Just because we can go that low doesn't mean we should. So from experience, I will tell you, if you can get your credit score higher, you're going to get better rates. You're going to get better leverage. It definitely reflects if your credit is challenged.
Definitely.
So sometimes it's worth waiting, working on that credit, maybe going through credit repair, and you'll be so much happier because you're not having to have such.
And I was on a call today earlier with a client where we were talking about this exact thing, that they want to move right now. And ultimately we had a conversation about exactly what Sarah just said, which is it might behoove you, right, to wait a little bit longer so that you can actually get better rates.
Absolutely. It really does. I know we're impatient. We want to do it now, but if you can really think of it logically, it can be definitely to your benefit. So let's talk about the main types of real estate loans and so you can understand them and how easy they are. So the big one everyone hears about is fix and flips, right? So a fix and flip loan is also called a bridge loan. And basically the basis of this loan is when you're buying a distressed property that needs some rehab. So this type of loan, it's a interest only loan. The typical term on this is about 12 months. Rates are between 10 and 13% because remember, it's interest only and short term. However, the benefits are that on the purchase, that lender will cover anywhere from 75 to 90%. Now, the way to get that higher leverage is with experience and good credit score. So you could essentially get in for 10% down. And on the purchase, they're covering 100% of that rehab. Now, to be clear, how that process works, you don't just get a check for the rehab at the closing date, because a lot of people would just take that and go take a vacation. Instead, and especially you, I know you do that. You do love vacations.
I do, big fan.
Big world traveler over here. I got sidetracked there. So anyway, the rehab. So they don't just give you the check. So the way that it works, it is self-funded in the sense that you do $5,000 worth of work in the kitchen. They come and inspect. They reimburse you. Typically, it's about 5 to 7 days later, you have that back. So that's where that capital stacking can be awesome because then you're not covering those costs with your own money. And you just, they reimburse you, you pay that off, right? Which then helps your business credit grow, get more offers. Anyway, I got sidetracked. I love capital stacking so much. I just always bring it into every conversation.
So it's so flexible.
It is so flexible.
Lots of ways.
Lots of ways. So that's the essentials of a fix and flip loan. Did I miss anything?
No. I mean, you hit the nail on the head. And for all those that are obviously looking to do flips or thinking about flips, I always like to say that always helpful to understand, right, what you qualify for and what's possible, and getting a different perspective from those that a lot of times I talk to folks that have had amazing relationships with banks for the majority of their history, and then all of a sudden now,
It's changing.
not so much. So it's always helpful to understand, what would terms look like, and to get soft terms, at least with the way that we do it, takes about 10 minutes to answer a couple questions that we have, and then it's always up to you to make a decision, right, on if those are the right terms that make the most sense for what you're looking to do. Simple process.
It is very simple, and it is different. Let's be clear on that. So when you are going through a bank, you actually have to go in and get pre-qualified for a certain amount. It's going to be based on your income and those factors. When working with a private lender, that's not the way it works. You don't get pre-qualified for a certain amount. That amount is dependent upon, do you have the down payment? So, that's what's really going to be the factor. And then obviously the numbers have to make sense. It's going to debt service. So there's no getting pre-qualified for a certain amount ahead of time. And that's where people are like, what? How does that work? But it's different, but I think it's better.
Yeah.
So that's loan number one. The other one that we'll talk about for sure is a DSCR loan. So that stands for debt service coverage ratio, can also be called a rental loan. Basically, the easiest way to understand this loan is that we're making sure you're not upside down at the end of the month. So the loan is figured, the numbers are figured such that the amount that you will be collecting from your renter each month is going to exceed the principal, interest, taxes, insurance, and any association fees by at least 10 to 15%, because we want you to make some money on that.
Important.
Absolutely important. So that one going to be a down payment of 25%. Again, property will be put in the name of your LLC. Very simple process, can close in as little as 10 days. It's a 30-year fixed rate loan right now. Right now, rates are between 7 and 9%. Doesn't mean it's a bad time to invest. Hopefully rates go down in a couple years, you can refinance into a better rate. But for right now, they're between 7 and 9%. Still a great time to invest. Absolutely. Real estate is a great investment.
And there are a lot of different types of investment properties, right? There's single family, there's multiplex, 2, 3, 4, 5 unit, 8 unit, mixed use, commercial, which we can look at and get a better understanding, right, of your situation, for those that are looking to obviously understand that with their next property that they're going after.
Absolutely. So those are the two main ones. There's also a cash out refinance. So this would work on, you can do it on a rental property. You can do it on, if you have a commercial building that has, stores, whatever. But on a rental property, it is absolutely, easier and faster. How that works is you can get up to 75% of the appraised value. So let's just go easy. It appraises for $100,000. You can get $75,000. Has to pay off if you have a mortgage on it already. It's got to pay that off first. Whatever's left, you get. And now you are in a 30-year fixed rate DSCR loan.
Yep. And
So-
a lot of folks end up using these to invest in their next investment
Absolutely.
property.
So you got a ton of equity built up. You don't owe that much. Boom, you take that out. There you go. There's your down payments for your next property or two right there. So, a lot of people don't realize what they're sitting on. And then let's talk about, so there's the cash out refi, there's the bridge loan, there's the DSCR loan, and then
Construction.
there's ground up construction. So, this could be a long conversation. We'll keep it easy. The best way to look at ground up construction, this could be making homes that are going to be rentals. This could be building apartment complexes. This could be building a shopping mall. This could be whatever, you name it. That's going to be ground up construction. The way that those loans are figured, it is again a bridge loan. So during the construction, it's interest only. That's very, very straightforward. It's a drawdown system, but the loan works on a total cost basis. So the way the lender looks at it, they're going to look at the total cost of the land plus the total cost of the construction, including all land improvements, the horizontal, the vertical, and they will fund up to 80% of the total loan to cost. So in some instances, you've already bought the land, you've already done some improvements, sidewalks, whatever. They will take into account that you've already spent and done some improvements, sidewalks, whatever. They will take into account that you've already spent. And so in some instances, clients will come in with just having to pay the closing costs because they've already spent so much money. So it can be a really great loan. Biggest thing on construction loans is the lenders are looking for experience.
Yep.
So if you haven't done any, it can be a little tougher. You have to get that general contractor has to agree to go on that loan during the construction phase. So, sometimes it's better to get your feet wet first. Sometimes they will look at, if you've done several flips, they will count that as relevant experience. But if you're coming in and wanting to build like a 40-unit apartment complex, you've never done anything in your life, it's going to be a little bit challenging because they'll figure that to be pretty high risk.
I would.
I would too. That would be a pretty, but hey, some people are very ambitious and they just want to go right for it.
Absolutely. God bless them.
God bless them. That's very true. What other types of loans? Did we cover them all?
I feel like we covered them all. We talked about capital stacking, right?
Yes, we did.
Ground up construction,
Yep.
cash out refi, bridge loan for fix and flips, and the DSCR.
Awesome. So, I mean, and we can talk till we're blue in the face about real estate investing, but the best way to learn is actually to do it. I mean, you could learn everything and research until you're blue in the face. You're not going to learn it until you actually get your feet in, get your feet wet, and do it. You'll learn from your mistakes. You'll learn from other people doing the same thing. You know, I always
Exactly.
suggest joining social media groups for investors. That's a great way to learn as well. But honestly, just rip off the Band-Aid and do it, and that's where you'll get better. Absolutely.
Agreed.
Thank you for joining us. Thank you, Corey, for joining me this evening.
Pleasure being
It's
here.
been a pleasure having a special guest star this week.
Yeah.
Who knows, maybe he'll pop back again in some of our future videos and surprise us all and share his knowledge with us.
Absolutely.
So thank you, and we'll see you again on the next video.